Where does the market go from here? Let's ask Walser Wealth Management President Rebecca Walser, Gibbs Wealth Management President and CIO Aaron Gibbs, and Senior Wealth Advisor from Payne Capital Management, a group I'm not affiliated with, Courtney Dominguez. Rebecca, last month, Wall Street finally kind of woke up to the possibilities that Congress won't come through with more stimulus. But now, they kind of believe in again, a little bit of, stuff coming out of D.C. But are the smartest folks in the room, Wall Street, going to get played again by Congress?
Oh, Charles, I certainly hope not. It would be a really ugly picture if we don't get some stimulus here. We need it. Like we've talked about Disney coming out saying 28,000 jobs. We know United, we know American. We've got to get some stimulus. And I think we're banking on it at this point. It's got to happen. And I don't want a bad deal, but we need some deal.
Aaron, it felt like in September, Wall Street, a lot of that selling was the message to Congress to, hey, get your act together. In the last few days, okay, it felt like maybe something was going to happen. And now we're on pins and needles. Where does it go from here?
So I still see that September was that moment where we saw a crack in the momentum and more of a value play. I think we're going to continue to see that. I think investors might still be a little disappointed by whatever stimulus plan we've got. We see a lot of Wall Street with money staying on the sidelines, not just really full. There's been a lot of low trading volume. And so I think we need to see a huge stimulus plan for everybody to jump back in.
Courtney?
Yeah, and I kind of take a more optimistic stance here. I do think that the stimulus really is needed because there are a lot of people who are out of work still. And even though the economy is recovering, there's still people who haven't had paychecks for quite a while. But when you look at the economy or the stock markets, I really don't think that they're as dependent on this stimulus package as much as I think a lot of us are led to believe. And we are seeing that just with the stimulus that's come in, we are seeing this V-shaped recovery in GDP. And we are seeing people are still spending, and people actually have done a really good job of putting themselves in a good position to kind of weather through even all of this ups and downs going on if the next stimulus package is going to happen, because people have saved a lot more, paid down a lot of credit card debt, which is why they're still spending right now. So I don't want this to go a lot longer, but I think that it can sustain a little bit longer.
So let's follow up on that and talk about the consumer, because to your point, Courtney, they certainly spent a lot more money than Wall Street thought they had. The spending report that came out today, but it did come at the expense of 700 billion rather, in less savings. And obviously that's a trend that cannot continue without at least another jolt of some sort of fiscal help. Now, I have been telling investors to look at these brick and mortar survivors, including Bed Bath & Beyond, which is without a doubt to me is the stock of the day. New management turning the company around big time. The shares are soaring. Aaron, I want to go back to you once again, because I've been talking about buying these sort of brick and mortar survivors, and they're doing very well. What are your feelings on some of these names?
So really, for me, home is where the money is. And so I like to break it out as not just brick and mortar, but the companies that, not the apparel guys, but the companies that are really focused on home goods. So Bed Bath & Beyond is a great example. And I've recommended Home Depot and Lowe's tons of times, but also the people who make all those things at these retailers, like Newell Brands. They make Rubbermaid, they make Mr. Coffee, all the things that you buy at Bed Bath & Beyond. I also like Scott's Miracle-Gro. As you're moving into these single homes, have a lawn and you've got to take care of it. So I really encourage people to think out of the box and just really focus on the idea of moving from multifamily homes, apartment dwellers, into single-family homes, and what are all those things that you need, and including auto sales. And so I think that's where we're really seeing the strength in the market. And that's where also my concern comes back with the stimulus is that industrials are really hurting, but the consumer is still doing okay. Not great, but not as bad. And so I really want to focus on home goods and consumer spending on the home.
And folks, make sure you look at those omni-channel numbers, right? So in this case, these guys are able to turn around the digital sales. I want to talk about something that I don't think is getting enough attention, right? The U.S. dollar. Look, I know it's a patriotic thing to say we want a strong dollar, But when it's weak, man, investors make a lot of money, and it's not just stock investors. Rebecca, so tell me, I mean, is there a sweet spot where multinational, U.S. multinationals and investors can benefit, and yet the dollar retains that reserve currency position, which some people were worried about as it was in free fall and everything else is going through the roof?
Yeah, Charles, we actually need the sweet spot, right? Because when the dollar's too strong, obviously it becomes our goods overseas become too expensive, and then you have a lot of problems selling U.S. goods overseas. But when the dollar's weak and we have a weak economy, where's the safety haven? Where's all the international investors that are going to flee to the dollar when they need safety, when the market does have some volatility, which we could very well still expect, and I still do expect since coronavirus isn't out, and we still have no stimulus. So we want the dollar to be strong. We want it to be the beacon of safety for the investors around the world, but we don't want it to be so strong that it's hurting our exports and our manufacturing at home exporting out, because it's just too expensive against the other currencies. And so we really have to watch that, Charles, and make sure that we're benchmarking a strong dollar, but not an overpowering dollar.
Courtney, I like to see it come down a little bit more. I think if you look over the last few years, I think there's room for it to come down. I know it's not politically correct to say so, but how does it inform your investing?
Yeah, there's certain parts of our portfolio it actually is going to help, to your point. And like international markets are a really good beneficiary of that, where they actually have underperformed the U.S. over the last decade. And arguably a part of that reason is because the dollar has been so strong. So seeing the dollar weaken is going to help things like international. It's going to help things like commodities, so gold and silver. And making sure you have a piece of those in your portfolio is actually going to benefit from that happening. And it is something we always want to make sure we have a piece of. So if it comes down, I agree with you, it actually can be a beneficial thing.
All right, ladies, let's look beyond stimulus and politics, right? Let's push it out a little bit further. Everyone agrees, right? We got something of a V in most categories. The economic trends are phenomenal. Earnings expectations for 2021 are phenomenal. Aaron, it really seems to me to be a fantastic case for a strong stock market in 2021. Your thoughts?
Yeah, when you look at the expectations, we just see, this massive contraction for 2020 and then a complete rebound. And that expectation has stayed pretty stable. So I'm actually trying to look at where are the sectors that are going to be the ones that really beat? Because we know we have these super high expectations in infotech and communications. So where are going to be your opportunities that are the surprise opportunities in 2021 that are really going to blow out the numbers? And so those are ones that I'm thinking out where analysts have been sort of consistently underestimating, and those can be your real winners. And consumer discretionary looks to be one of those places.
All right, let's leave it there, ladies. Rebecca, Aaron, Courtney, thank you all very much. Always appreciate it.